Namaskar, you're watching Market Cafe with me, Shreyanshi Singh, and over the next hour or over the next few minutes rather, I'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar and tell you what the brokerages are saying as well. But well, first things first, let's take a quick check going on the US markets. It's a shortened trading week in the US with the market also dark for the Thanksgiving holiday on Thursday and then set to close early on Friday as well. So you do expect trading volumes to be remaining light as well, but even still stocks finished in the green across the three major averages on Tuesday. So when you take a look at the S&P 500 or even the Dow for that matter, that reached fresh intraday and closing highs. So those are the kind of levels that you're looking at, and in terms of what you're looking out for, of course, looking toward Wednesday US time, you do have the personal consumption expenditures price index data as well. Investors will be looking through that particular data set for indications on how the Fed then may be proceeding on its rate policy at its December meeting. So definitely something that we're watching out for, and the backdrop that this is largely against is that the Fed issued the meetings from its November meeting on Tuesday. So that is definitely something that we're looking at as well, because you do have central bank officials saying that they anticipate more interest rate cuts coming down the pike. They've also said that the pace of cuts would be happening gradually. So that is the verdict coming in from the Fed in terms of the key commentary that we're looking at. And in terms of other key data, then you do have personal income as well as consumer spending for October. So that largely is the kind of handover that we have when it comes to the US. Let's also take a quick look at oil as well as gold. Firstly, let's take a look at oil prices, because you did have a slide coming in there, giving back some of those early gains for oil in choppy trade after Israel agreed to a ceasefire deal with Lebanon, reducing oil's risk premium. So let's take a look at price levels then. And for Brent, you do have a downtick of just about 0.3% coming in, so $72 a barrel is what you're really looking at for Brent. And US WTI as well, there's a downtick there as well of just about 20 cents. So the price level that you have for WTI is $68 thereabout. Similar moves, 0.3% downtick coming in for WTI as well. So that's largely the handover coming in for oil prices. Let's also take a quick look at gold prices then, because gold was caught in a tug of war, dipping to a week's low as safe haven demand also softened as Israel agreed to a ceasefire deal with Lebanon, like I mentioned. But you do have concerns over Ukraine as well as US President-elect Donald Trump's tariff plans, and that is something that currently was limiting gains for gold. So when you take a look at spot gold, was steady around that $2,600 per ounce mark. So that largely is the kind of handover that we have there. But keeping it going with commodities then, according to latest reports, Russian state-controlled gas giant Gazprom is making the assumption that no more gas will be flowing to Europe via Ukraine after December 31st in its internal planning for 2025. Now, Kyiv has said that it wants to end the transit deal, which will bring an end to more than half a century of gas flows from Siberia to the markets of Central Europe that also began during Soviet times and has been a steady source then of Russian budget revenues as well, while Ukraine has also said that it would not consider extending the transit deal, which also generates up to $1 billion per year in transit fees for Kyiv as well. Now, Moscow has signaled that it was open for talks and continuation of the flows via the route. So that's the important update coming in as far as Gazprom's 2025 plans are concerned. But with that, let's also...
If you like this video, then like, share and subscribe to ET Now.